Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good morning. Ira Epstein of Lynn & Associates with your morning flash update for this Tuesday, the 1st of August, 2017, new month, new start to things, and the stock market, wow, knocking on the door of 22,000 in the Dow. So big numbers. However, it's not translating into anything in the Russell 2000, the larger of the indices. The NASDAQ hanging in here. Today's Apple's day where they're going to announce their forward thinking. And that's going to really be what the story is tomorrow. So it's a big report for Apple, and because so many people own it, you got to pay attention. The S&P not doing an awful lot. It's really a story of the Dow. It's an index story of those 30 stocks, and they're looking pretty darn good. The dollar continuing to stay under selling pressure. Pretty much flat day in the euro, as you can see. And, you know, all those naysayers about the British pound, I don't know what they're naysaying about, because this market continues to act very strong as a currency. When we look at our bonds and notes, remember, this is a week where the market will start jockeying around now as we get the all-important employment data on Friday. But we had a lot of economic data today, and I'll get to that in a minute as well. You're seeing some of that hedging pressure I'd been talking about. I was frankly surprised you got up to 50.5, but you did in the crude. We'll see what that market does. Now in the grains, they are getting smashed. Bean market, this is a bounce 3 cents off the low. It's been down 34 cents, and the rationale on that is the crop improved 2 percentage points, and that's the kiss of death when you get to this point of the year and the crops aren't under pressure. Now, we saw a lot of acreage shift, remember, from corn this year into the soybean market, and my guess is that's what you're playing with at this point, people fighting that particular battle. So that's something to keep your eye on. As I said, a lot of data. Construction spending down 1.3%. They were looking for it up a 0.5 percentage point, so that's bad news. Manufacturing headline recap, 56.3. They expected that. The price index got a bump. That is good news. New order index got a bump. You're pretty flat in the inventory, so that's all not bad data. I didn't see anything terrible there. The bad data comes in the personal income. It went up nothing. They expected it up 0.4%. The spending went nowhere on it. Remember, the consumer in America, he drives everything. They revised the personal income in May down 0.1%. So we're just not seeing that consumer getting all that money that we were hoping that they'd get. Australia's central bank kept their interest rate unchanged today, and they say that's consistent with their growth and inflation targets. In Germany, the adjusted jobless fell 9,000. That compares to the 5,500 fall that we just saw. That's all good numbers for them. The Eurozone's July PMI was 56.6. That compared to the 56.8, and that's well below June's 57.4. Eurostat said that the Eurozone second quarter GDP up 0.6 from the previous quarter, in line. Nothing super stellar there. I don't know that these numbers are enough to move Draghi one way or the other. That'll be the interesting part. In the UK, the July PMI came out 55.1, better than the 54.2 in June, and well above expectations here of 54.9. And Brazil's central bank, they just released their monetary policy, and they're keeping it where it is, which means probably another interest rate cut happening to them. And one of the reasons they're able to cut now is inflation there has come down. In fact, that's one of the problems that the world has, this lack of inflation. Yet the gold market keeps watching the dollar. It keeps moving up here. But when you get a dollar break as big as you've had since the beginning of the year, and gold is not up dramatically, the story, I think, is not necessarily the break in the dollar, it's the lack of world inflation, and that seems to be what this market is looking at. North Korea's not moving the market, energy prices aren't moving the market. It's got to be that one other element, and that's going to be inflation, and we're just not seeing it in the wages. So something you got to think about. You want to get our chart of the day. With all the action now going on, the recent bottom that you just saw in the crude form, 4250 gave you new price counts. You want to get those. Soybeans, if there was ever a chart that was on the money, it was yesterday's chart, and the beans, if you're on our list, you got it, so you know what I'm talking about. This is a free subscription, folks, so you get to see where, if a market starts a move, where might that market go. It does not tell you buy here and sell there. What it does instead is it says you've reached a point where the market's probably going to stall out, and that might be the whole move, in fact, and we teach you how to do that. We also provide free charting software if you want to try it yourself. How do you get this? And again, it's free. Give us a call, 866-973-2077. You can go to our website at www.iraepstein.com. You'll see a carousel of free offers. Click on any of them. You'll be able to subscribe from there. You can click right up here if you're watching me on YouTube. You'll see that icon. And underneath us on a number of websites, it says click here for Ira's free offers. I'm Ira Epstein. I hope you look for me in my end of the day videos, and I'll see you then.